Hello again, Solis Wealth family. Greg Solis here with the update. First, on the family front, Monica and I had the opportunity to go to West Palm Beach in Florida. Oh my gosh, what a cool place. We were there many years ago, but we hadn't really spent some time there. And boy, we had a great time. What a beautiful place. Nice shopping, good restaurants. And it was nice just the two of us to get away. We actually went and celebrated a friend's birthday, and that was a very nice celebration. And we were only gone for, 4 nights, but it was a quick getaway, but it was nice. I gotta be honest, I always love coming home as much as I love leaving. So I guess that's a good thing. Kids are doing great. They're all back in their places doing their thing. So on our end, the family's doing well. I hope you and your family are doing well also. Well, market-wise, last week turned out to be a pretty volatile week. A lot going on. I mean, first, there's some tensions, of course, with what's going on with Iran and potential military intervention. Some of the negotiations with the nuclear arms talks were kind of failing. And so we saw oil prices going up a little bit. We saw a flight to quality, meaning we saw some money shifting over to bonds. So we saw interest rates come down a little bit on the 10-year Treasury. Just a hair above 4% on the 10-year Treasury, which is good. So we saw bond prices go up a little bit. But again, there's just been some current concerns out there, and the equity markets have been pretty volatile on that, as well as we saw some issues with some private credit companies out there. Again, got to be very careful, got to be cautious with some of there's a lot of inflows into private equity and private credit. And so there was some issues with some liquidity issues there. And so we saw some sell-offs there, and that created a little bit of concerns in the market. And then, of course, the AI story continues to really just be a disruptor in good ways and bad ways. Right now, there's a lot of concerns that some of this AI is really going to disrupt some of the business models for a lot of companies out there. For example, software, trucking, we saw get hit pretty hard. Software companies, they think there could be a lot of companies that will be displaced with the utilization of artificial intelligence. And so we're seeing some companies really struggling out there with the AI competition, if you will. So we're going to continue to see some changes in the markets as we figure out how it's changing the business models. But on the positive side, as I mentioned before, there's a lot of productivity gains. There's a lot more efficiencies. Corporate earnings still look really good. GDP numbers still look quite solid. Inflation is down to 2.4%, which is great to see. The Fed is likely to lower rates. We got about a 60% chance is what the market is pricing in, that we'll see the Fed funds rate come down in June. So there's still a lot of tailwinds, but a lot of volatility, a lot of things out there. So a lot of tug and pull right now, and that is creating some volatility in the market. So overall, everything's still in pretty good shape. We see the S&P 500 down about 2.5%. The NASDAQ's down about 5.5%, but bond prices are up a little bit. But it's been a tough week, a tough couple of weeks with some of the things going on in the world. Overall, we're in good shape here. If there's questions or concerns or anything else we could do for you, never hesitate to call. You know we're here for you. Take care and God bless. Hey, if you're finding these videos helpful, go ahead and hit like and subscribe, and make sure you click on the notification bell as well so that you can get it every time. Thank you.